This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. It's approximately 8:40 p.m. on March 3rd, 2021. Welcome. This is our midweek strategic webinar, an important one, obviously, given the circumstances in the market, which is nothing new. It happens all the time. So let's relax a bit. Take a nice breath. This is not like something that just happened once in a lifetime. This happens almost every month, almost every 1 or 2 months. On that note, it is the 3rd of March, 2021, 8:41 p.m. Eastern Standard Time. Full disclosure, this is purely for financial education, not for any solicitation or advice. And the next disclosure that I'm compelled to make is that trading stocks and options are risky business. So if you're not a risk trader, then please do not trade, period. Okay, next. Next. Hi, Leah, how are you? We have a returning member here, Allison. Allison, can you hear us? Do you have a mic today?
I do have a mic.
There you go. I hear your lovely voice. Wow, fantastic. How's everything out in, where are you? What state?
I'm in Georgia.
Yes, I thought so. 404. Love that area code. You know,
Yeah, that's an old area code for me. I'm in Athens, but yeah, near Atlanta.
I should know it. We're in New York, New Jersey. We have had 16 new area codes. So, but I like 404 because if you add it up, it becomes 8. So it's Clueless 8. So there you go. All right, little stupid humor there. Okay, these sessions are recorded, uploaded within 20 to 25 minutes directly on the real-time Twitter feed, and within a day or so, directly on the YouTube channel, Clueless8 _ YouTube channel. I hope all of you are subscribed to that, because anytime I'm putting anything up there, you get directly notified through the Google system. So please make sure that you subscribe, get all your friends to subscribe, and the best part of it is that you get to see some of the fantastic webinars that we do. Most of them have been dead right. Some of them have been delayed, but then right. Okay, just what is happening right now. And of course, the best part, it's free. Free, which is the best word in the American dictionary. Okay, so it's free. Okay, on that note, let's begin. So what happened today? Okay, I mean, what happened a couple of days back and forth? We had some big rallies, this and that. We got sucker punched. In the meantime, a couple of points that I want to make. If you've noticed, and I'm sure all of you have been tracking my real-time Twitter feed, because that's the only place that's the conduit that I get to express my comments, most importantly, my charts and my alerts and such. I've been staying away from big cap technology stocks. And the whole situation today happened between first part of the morning, when a whole bunch of our stocks were earlier, some profits were taken, and the second half of the afternoon, when the market gave in because they couldn't withstand the pressure of massive institutional forced. The word is forced. What is the difference between voluntary and forced in life? Can somebody answer me, Allison? Okay, no one's going to answer me.
Sorry.
Go ahead. No, go ahead. Go ahead, Allison. I want to hear it. Go ahead.
If it's forced, it's not in your control. So I assume you're talking about forced selling today.
I'm talking about life. Okay, it's the trading is life. Okay, so you're answering the right question. Let me answer in a very simple way. Forced is when you are forced to do it. You don't like it, but you have to do it. Okay, you don't like it, but you have to do it. And voluntary, from your own choice selling, is something which is regular selling. What's been happening lately with the NASDAQ has been forced selling. There are many different dynamics at work in the market. First of all, there are big funds like ARK, Cathie Wood, that everybody, including many people here, some people here who are active traders, think she's a goddess. She's very smart. Okay? But she's also in very, very fast moving, high momentum growth stocks, both large cap well, some large cap, mostly mid to small cap. Her fund is down almost 21% as of today. That's considered in the Wall Street lexicon as has entered bear market territory. Is she flinching? Is she sitting there getting pink diapers from Amazon? I don't think so. I think she's buying. She's buying the stocks that she believes in. But what's the rest of human retail traders doing? They're saying, oh, it's all over. It's all over. Okay, understand. I'm not here to change your mind. I'm not here to change anybody's mind. But I'm just telling you what really happens in the real dynamics of the market. You've got ARK management funds, which is the most widely followed. She posts her buys and sells, which is unheard of in American financial media. She posts her buys and sells every day, every night. You just put your email and you get it there. You're like, oh, she's buying this, she's buying this. You know how many traders follow that? Big time, because she's smart. When Tesla was falling apart, $100, $200 stock, she said, this is the future. And she's still buying Tesla. Okay, just give you one example. So she has a huge track record. Her fund has beaten every single idiotic mutual fund that's out there. I should know it because my first job was at Putnam Investments at 1 Post Office Square in Boston, right out of college. Okay? Old school fund managers are not what the new generation of traders, which has come about, not just because of Reddit, not just because of GameStop, but new generation of traders who have taken a keen interest in the US stock markets, which I think is brilliant. And yes, they ran up GameStop to some unheard of, ungodly levels. And it's still at an ungodly level and still holding up. So why shouldn't they? Because every hedge fund manager who's nothing but a complete scumbag overall, to be honest with you, runs the market up 400, 500, 600 points on a certain day, just happened over the last couple of days, and then drops it 400 points, 500 points the next day. So aren't they not manipulating the market? Absolutely they are. Are they not manipulating individual stocks that have great earnings, but then they drop it 20 bucks and then 3 days later they take it up 60 bucks? Absolutely. So why shouldn't the Reddit traders, the masses, also take control of certain stocks? But of course, they're not looking at valuations and stuff. They're just running it. Okay? Just like Rocket. When I gave it, within about an hour, it went up 53%. I took a whole bunch of profits, left a little bit in there, and then the stock was down at the end of the day because of the pressure on the markets. So my point is this. I've been doing this for a while. Does this mean I'm a friggin' genius? No, I think I'm more stupid than I was before, but I'm far more clever about understanding how the market tricks and the manipulations work than anybody else out there. If you simply look at the simple technicals, then the world is over. But then you dig into it and you get into the more complex technicals, which most of the trading services never ever do. And we're going to look at some of them tonight. Okay. And then you look and you understand the macroeconomic factors, like what's really wrong. Is there something really wrong with the US economy? Is the credit market really crumbling? Which is the real danger. That's when a real bear market starts. Okay? The credit market collapsed and we had the second largest depression since the original depression in the 1929s because of the housing market, not because of the stock market. Back in the 2007, 2008, 2009 period, and it bottomed on March 9th, 2009. S&P hit 666, the devil's number. And where are we now? So every single time, and we're going to look at that too, and I've showed that many times, this type of stuff happens. And in this particular case, bond deals, which Allison asked a terrific question earlier on. I'll explain it today. What my thought process was when I put out there. The 10-year government bond is going nuts. It's going to completely crash U.S. capitalism. Bullshit. We're at 1.47% right now. Okay? So when you dig into it, because everybody wants simple answers, and this is where we're going to get into the charts and stuff. Everybody wants easy answers in life and in trading. If you want a very easy answer, I have none. If you want a smart, intelligent, factual answer, I have many. Are they going to be dead right within a matter of minutes, within a matter of a day or two? Nope. Are they going to be overall right? Abso-frigging-lutely. No question about it. Why do I say this with so much confidence? Because I have walked so many members and traders since I started this service back on April 15, 2014. Okay? Through so many difficult market situations. And I've been dead right on them. Dead right on them. I am overall bullish. I am short term, not even bearish right now. Why should I be bearish right now when the NASDAQ has corrected 8%? 8%. $200 billion have been on paper or on money wiped out over some of the best companies in the world. So I should be bearish right now? Okay. In that case, why don't you give up your American passport and take a nice flight to Burundi and go live there, or Venezuela or somewhere? I'm dead serious. Somebody telling me to get super bearish at an 8% correction of the NASDAQ while the Dow Jones is still holding up fine, the Russell 2000 is still holding out fine, did succumb to some pressure. It was up nicely after I told people to buy the IWM, and then it succumbed to pressure of the overall market. Come on. Look, I'm not here to change your mind. Get as bearish as you want. Let's see who wins over the next 7 days. How about that for a bet? Because I'll put money down. Of course I put money down. I'm a friggin' trader. Now, have I told all of you? Let me remind some of you about this. And these things are very important to you and to me. Let me remind people. When things were going nuts and people were coming in and showing charts like, oh, this is going to go like this and that, what was the word? And please look up my webinars from a couple of weeks ago. I said, take it easy. I can't be that bullish at these extreme levels. Take it easy. Because everybody's frigging bullish. Kathy Wood posting her trades end of the day, Reddit running stocks, everybody's buying this, that, everybody's a frigging genius. I said, take it easy. Let's stay selective. I like buying stocks that are coming off the bottom. And I've shown many that have come off the bottom, made some nice money, then pulled back over the last couple of days. So guess what? I love my members. I love my traders. But guess what? Those uber bullish people are nowhere there to be found. All DMs that I get over the last couple of days is complete like, oh my God, this is it. It's all over. It's bearish, but it's going to go down more. Of course, it's going to maybe go down a little bit more. So the last time this happened was last week. Then we had a frigging rally and we bought at the bottom and it was a humongous rally. What we call a reflex technical rally that happened over 24 to 48 hours. Do I think that might happen over the next 24 to 48 hours? Which we do have in hand before we all get hit by a huge meteorite, coming from, the Andromeda galaxy or wherever, and all of a sudden we're all finished, right? Yes, we have 48 hours, which is Thursday and Friday. So please write your living wills and say, okay, we're not going to live after Friday. So the bullishness is gone. Right now, when I look at the market, I feel the market. Trust me, I do. I feel the market. Like they say, you get it? I get it. I'm kind of weird that way. I mean, I talk to people for like 20 minutes. I get to know them so well, like what kind of person they are and this and that. Believe me, that's just one of the great characteristics that I have, even if I've never met them. I feel the market. And this market right now is in a state of massive despair, particularly one sector, NASDAQ, techs. All of a sudden, like one of the DMs I got, nobody wants them. Okay, sure. Because the real smart money is buying our bargain basement prices, slip and slide, they'll buy more. And as tactical traders, I don't care what happens 3 months from now. I've said that repeatedly. Yes or no? The answer is yes. I care what's going to happen between now, the end of March, end of the first quarter. That's as far as I'm going to go with my predictions. And I've said Q1 will end well. And I'll stand behind it. Remember, a man or woman without an opinion is not a man or woman. You know who said that? Dick Tracy, the cartoon character. It's true. So I have my convictions. Now, do I think like everything's going to go up? No. Selective stuff. DraftKings, United Airlines, Boeing, Big C, even Airbnb will bounce. Am I telling everybody to buy the crap out of Apple, Amazon, Facebook? People have said, why aren't you mentioning those stocks? Because I don't want to. Google, Tesla, I'm going to stick with it. We had one earnings play that I put out there, one of them, which is Splunk, a New York-based company, data analytics. Okay? Splunk is up $9 right now. So the few shares that I bought and the calls that I have cheap, and I got them cheaper today, thank you for the forced sellouts, it's going to make me some money tomorrow. Remember, you don't have to be a long-term trader, because long-term we don't know whether inflation is going to pick up, whether the 10-year government bond yield is going to rush to two. What the stupid thing is that? Okay, good. When I get that message and I say exit page and I have to reset everything, we don't know that. What I do know, the U.S. economy is opening up. It's actually great news all over the place. So somebody who has no idea about the dynamics and the technicalities of the market and the algos, which are a bunch of nothing but complete robbers. You know what an algo HFT program does every single day? And these are programs, like I said repeatedly, run by supercomputers, run by a bunch of geeks who are hired by big hedge funds to run these programs. What do? They do drive-by shootings. Like Tupac, didn't he die of drive-by shootings? And what was the other guy who died? The East Coast, West Coast rappers, the fat guy, Tupac, and what was the other guy's name?
Biggie, B-I-G.
Yes, B.I.G. Exactly. God bless their souls. There was an East-West Coast fight, right? Exactly. So algos are like drive-by shootings. So if you're going to be in a neighborhood with a drive-by shooting, which is called the stock market, then you got to protect yourself. You're going to be in a bulletproof car. You shouldn't be driving, and you should be very selective. We had another stock that bounced off from the bottom very nicely, Dollar Tree. The hedge funds took it down to $95.86 after opening it at 96, down $2 from yesterday. Remember, as a trader, you cannot be fixated on the same freaking stocks all day long. I tell my best friend Paul that all the time. We talk almost every evening. So here's Dollar Tree, and then the hedgies run it up to almost, looking at my other screen. This is Dollar Tree. This is not Bergdorf Goodman, okay? Or Barney's New York. This is Dollar Tree, where America goes to get something cheap for $1. Like that dollar burger or chicken sandwich at McDonald's. Everybody likes $1. Holla the dollar, okay? So They ran it up from 95.86 to $104.69. The calls went from a low of literally 25 to 30 cents to $1.61. So if you all want to be traders in this market, or any market for that matter, but specifically in this market, then prove yourself and go to bed asking yourself, am I an active trader, or do I want to buy things cheap and not look at them for the next couple of months or years? Once you answer that question honestly, not like some BS political speech, okay? In your heart, you're going to be fine. I'm an active trader. I have my long-term portfolio, stuff that I like, medium-term portfolio, and then I actively trade certain things. Yesterday, I had one of my biggest wins on Rocket. I didn't post it. Somebody should say, why the hell didn't you post it? I didn't post it because it was too heated up. I posted today. You could have made 50% on it within 2 hours. Yesterday, they went up from roughly $2.67 to $11. Yeah, because I do some trades on the side. I'm not going to post like every single thing. I'm not a slave to my service. No offense meant to anybody if I use the word slave, because we're in a politically correct world. Okay? Exactly. This GME told you guys to buy it when it was $99, $100, $105. The freaking thing is at $125, for God's sakes. Yes, it went back and forth, but I stand by it. You could have made $25 on it in a market like this. I'm looking at my other screens right now. I'm looking at stocks so freaking oversold. I'm just like, why don't I have $10 million just to invest in the market right now? I'm dead serious. So I selectively bought a few stocks. So in summary, okay, my friends, I am not here to change. I am not here to, I have notifications I get from Reddit. And one of them just came through. I wish I could show it to you. It says, today I learned Genghis Khan, who was the great warrior back then, would marry off a daughter to the king of an allied nation. Then he would assign his son-in-law to the military. Why the hell is these guys writing this? I have no idea. Which basically he's trying to say something which I know the history of Genghis Khan. He conquered almost half the world. But anyway, forget all that stuff. So what I want to say is I'm not here to change all your minds. Stay with your bearishness, bullishness, whatever. I'm just going to show you what I see, what I think might happen, what my experience has been. I am being very selective. I'm being very quick with profits and such. And I am selectively buying when everybody is completely shitting in their diapers. Excuse my French. I am. Selectively. The problem with a lot of you guys are all or none. Like, okay, this is it. It's going to go higher. Or like, oh my God, it's all over. It is never all or none. It is always in the middle. So that's all I got to say. All right, so let's take a look at the S&P 500. This is where we were. This is the futures, obviously, but the actual market. We were at the highs, 39.60. Everybody's super excited. I even said we could possibly hit 4,000, but I repeatedly also said that around the 3,960, 3,980 mark, we might hit some major turbulence. And I've been saying this when the S&P 500 was at 3,000 and less. Remember, every point on the S&P is roughly 7 or 8 points on the Dow Jones Industrial Average. Allison, I'm going to cover the TNX little latter part. I didn't forget your question, which was a terrific question. Thank you. So everybody's like super excited. Everybody's Cathy Wood. Everybody's a genius. Everybody wants to buy Fubo, which I still think is going to go a lot higher. Everybody's just like, oh, yeah. Okay. Now the same people are like, oh my God, I can't do this anymore. Okay, fine. That to me is motivation. When I hear the masses fall and say, I can't get up. Okay, fine. So here's the top, here's the bottom. This is a beautiful chart. This is what happened. So we had this megaphone pattern down, just like that. Just the way we had the megaphone pattern on the VIX, right? Except it was going higher, and then it exploded. Well, guess what? The selling exploded downside. Then we had a monstrous rally that started on the 23rd. What day was the 23rd, ladies and gentlemen? The 23rd of February was, well, it started on Saturday. That was, this is futures, so that's why it's showing the 23rd. But let's put it this way. It started Monday, the 25th. It wasn't months ago. It was just days ago. Because one of the things I try to do, try to share and teach, is mental calibration. No two people are alike. No two traders will think the same way. But I'm just, saying that, come on, mentally calibrate. Stop this all or none bullshit like, oh, it's all over. Oh, it's all going to the moon. No, in the middle, as tactical traders, we make money. It's not a walk in the park, as I've said a zillion times. This is a walk through the roughest neighborhoods in Brooklyn and the Bronx, which have been very gentrified. So they're actually, very nice right now, but still, back in the days, right? So you have to stay away from the alleyways, and sometimes you're not even of the alleyways, and a bullet's like flying over your head. That's what the algos do. It's like the south side of Chicago. Watch Shameless, the show. You'll know, all right? One of the funniest comedic shows, but what a great show. Anybody here seen Shameless? I want to be impressed by my members. Anybody here seen Shameless? No? Yes? No? It's a 4 seasons gone. It's the funniest show. It's adapted from a British writer, a British show. It's the best show ever you'll watch. So nobody here seen Shameless. Watch Shameless. Maybe you'll be a better trader. Okay? Seriously, I can't believe that some of you guys haven't seen some of the best shows produced ever. Showtime. All right. So here's the chart. So everybody gives up on the 25th. Same story like they gave up today. Hey, look, if I'm wrong, I'm wrong. I'm not going to be wrong. Because my charts had never been wrong on extreme levels. My charts have been wrong on short-term fluctuations. Maybe for a couple of hours, maybe a day or two. When they get like this, we get a severe reflex bounce. Unless something is wrong with the credit markets. Nothing is wrong with the credit markets. Most of you, with no offense, man, have no freaking idea how the US economy works. It's true. What do you think Donald Trump won? He has a great idea how the US economy works. But when he gave his speeches, he made it so simple. It was like, it's him, he's a bad guy, he's a good guy, he's a bad guy, he's a good guy. And everybody bought it. And Trump was great for business, by the way. And Biden better be great for business, because otherwise he's going to get his butt kicked. So far, he's doing okay. Right. So I'm just trying to explain it. I'm not here to give you, like I said, some hardcore econometrics lesson on complex M1, M2 Fed money policy. Okay? Reserves. I'm just trying to show you very simply. So here we are. So what happens after that? Massive rally. 90% of you missed it. Comes a massive drop because the bond yield shot up to 1.61%. Okay? You think these great fund managers with their PhDs and their Harvard, Princeton, Stanford degrees really understand the markets? I don't think so. If they were, then do you all know that 70 to 80% of mutual funds actually cannot beat the overall market average? Did you guys know that? Did you guys know that? I'm asking for a response, please.
I had an idea, yeah.
Okay, anybody else? Mike?
No.
Miro, did you guys know that? That 70 to 80% of hedge funds as well as mutual funds cannot even beat the market average. Like a market average means what the S&P 500 does on a certain year.
Wow, that's crazy.
Google it. It's crazy. And they
I
have the
lived it for 8
smart
years.
What are they doing?
and that and the
Losing
smartest
money?
they're the smartest minds in the world. Some of the richest hedge fund guys are, analysts are driving their Bugattis and their Testarossas and their Huracans, Performantes and everything. And they can't beat the market. And Kathy Woods comes from nowhere at ARK Investments and beats the market by 80%. And she's down only 20% over the last couple of days. I don't know what school she went to and stuff, but I'm just saying. So Leah asked a simple question. What are they doing? Find one at a nice bar in Miami. Ask him, what the fuck are you doing, man? Why can't you beat the market? Seriously. He can say, oh, well, we use these certain, macro techniques, blah, blah, blah. No. All you do is you lump into one sector at a latter point, and this has been happening since 2009, by the way, and before. And the fund managers who are completely political, oh, Democrats, Obama, oh, we can't touch the market. In the meantime, the market goes up 70%. He's going to kill capitalism. Oh, okay. Trump gets elected. Oh, the markets are going to be totally finished because he has no idea about the market. Great. Market goes up a zillion%. Biden comes in, like my buddy next door, walking the dogs, starts to argue with me. Frank, you better sell everything. Everything's going down. Oh, okay. Thank you very much. Maybe I should hire you as my dog walker, which I never wanted. I'm dead serious. The guy like frigging got mad at me. Market goes up, boom. Politics doesn't matter. And why these guys, so much smart guys? Remember, Oscar Wilde once said, there are way too many educated derelicts in this world. You know what that means? Too much analysis equals paralysis. Too much analysis, fundamental analysis, without acting means you're making nothing. And then you're coming up on the top end of the rung over a longer term basis, and then you're getting smashed. And yet those guys get paid millions of dollars. Okay, let's move on. I'm not here to preach about the hedge funds and how idiotic they are. I worked for one for about a year after I left Wall Street. And trust me, I was just like, what? All right. I'm no genius. I'm just showing you. So we have a major triple bottom. No, quadruple, quintuple bottom. 1, 2, 3, 4, 5, 6. Right here. Hugely oversold. Very simple charts. Not even showing you the complicated ones. Hugely oversold. And let me just, where's my drawing tool? And by the way, while I'm talking, if somebody can come up with 3 good, solid, factual reasons why, and I really would appreciate that because I want to learn from other people too. I'm a constant learner from everybody. That's why I call myself clueless. Remember what Buddha, there's a Buddhist saying, and I'm not a Buddhist, okay? I eat meat like no one's business. So here's the thing. Buddha once said, an empty vessel gathers a lot of knowledge. So anything you guys say, I want to learn. So somebody think about 3 good reasons why we should go into a bear market right now and not just a corrective technical pullback that we're having. Please, I'd like to hear that before this session ends. 3 good reasons. And whatever it is, whatever's in your head. But give me 3 factual reasons. I will not argue with them. But give me 3 factual, economic, and stock market related reasons why the market should completely crumble instead of a short-term 10% have a correction, which we're already almost having on the NASDAQ right now. So please
Interest
think about it.
rates are going up, energy prices, a barrel of oil has doubled in the last 6 weeks.
Let me ask you a question, my friend. When was the last time the stock market, the U.S. economy totally collapsed because the barrel of oil went up over $60? A barrel of oil prices going up over $60 means the economy is getting stronger. Yes or no, Mr. Harrington? Does not
Well,
that help? Does that not help our shale industry? Does not that help our great oil industry? That's why Chevron and Exxon and all these companies going well. What's wrong with oil prices at 60? I'm not talking about 100.
the guy who drives the truck spent $600 to fill up his tank
While
6
he
weeks ago. Now he
while
spends $900. That's going to get put on your food bill, your appliance bills, and
so at $60 of oil, he's going to be suffering because because the economy is getting better, opening up, more job. Everybody's going to be back doing normal stuff. Businesses opening up. So versus that, it's bad that oil's at 60. I'm sorry, I don't buy that argument. Okay, let's move on. I don't buy that argument. Oil at 70, 80, 90. Yeah, I get it. But oil at 60 shows the economy is getting stronger. Factories are humming again. People are driving again. Businesses are opening up. Texas just opened up. Mississippi just opened up. That's fantastic news. New York is opening up. So you don't take that into account? Okay, I'm not here to debate that. All right, let's move on. So we got this. This is where the bottom. And I appreciate Mike for coming up with that. So somebody else think about 3 good reasons why the U.S. economy should collapse, other than the fact that they hate Biden and all Democrats. Because I don't give a crap about politics anymore. Okay, 2, 3, almost there, with a minor positive divergence, which we talked about last time. These things I noticed. Okay, this was happening, and all of you were giving up at the end of February. Okay, lots of zigzags, and we might get lots of zigzags. We're gonna go up like this. Okay, we were getting a positive divergence, and then what happens? Bam. So this part is normally by 99% of traders are missed. This is where the big money is made, because they cannot handle these type of volatility clusters, which might last for 1 to 3 days. Not everything has to be a V-shaped. All technical stuff here. Not everything has to be V-shaped. I would like everything to be V-shaped. Like buy the low, bang! 2 days from now, I'm up 300% on my options, and my stock's going up like nuts. Sometimes there's a zigzag. Given the pattern symmetry of what I'm seeing, if you call this 1, if you call this 2, and this is from February 23rd. If you call this 3, I would say 1 equals 3. Because the ferociousness of the selling, NASDAQ down 2.7% today. Many of you maybe might be new to the market. Many of you maybe don't care about market stats, but 2.7% in 1 day and almost 8% plus in a couple of days. Whew. Come on. That's what you call extreme oversold. We see what happens after the bounce. If the U.S. economy is truly going to crumble, over $61 oil, more jobs, U.S. economy opening up, vaccines galore, then that's a different story. Okay. So I say wave 1 equals wave 3. So this is wave 1, this one, this is wave 2, this is wave 3. So what do I think? It's going to go all the way up? Now, the lines are drawn every single time that it hit. I had drawn this line before, and this is exactly what happened. We went up, we went on a consolidation little thing, and then we crashed today, which was complete forced selling. It had nothing to do with interest rate. It is some Other hedge funds, I believe, from what I kind of know, which I cannot disclose, they were European hedge funds, and the selling mostly came out of Europe. Because let me be very honest with all of you, no offense meant to anybody. European hedge fund managers generally are complete idiots when it comes to US markets. Like complete idiots. I don't care if they're Swiss, Austrian, German, great people, smartest minds.
That's
They're
terrible.
very, let me finish. They're very good with Asian markets. They're very good with Asian markets. They're most of the money in Asian markets. Fine. But when it comes to US markets, they can understand US politics. They don't understand as a nation we actually like each other despite all the political stuff. And they don't understand anything about the Federal Reserve. And they always follow the US when it comes to monetary policy. I'm talking about the ECB, European Central Bank. I'm dead serious. Giving you some like real things to think about. Like, this is like having a Bumble date and like you're the person saying like, oh man, you sound like really smart. No, I'm not that smart. I just like to talk smart. Okay? Exactly. Europeans have complete idiots. And this selling mostly came from Europeans, and then our own hedge fund killers shorted the market more. And of course, forced margin sellouts. Because futures were up a lot pre-market last night. And it started selling around 6, 7 in the morning. Look it up. The Europeans started selling around 4 in the morning. Look, Europe's a great, beautiful continent. I've been there so many times. It's not been funny. I love it. Would I like to be one of their traders? No. Would I like to have their fine food and meet the great people and the culture? Yes, 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 any day. Would I like to be a tactical trader in Europe? No. They're all frigging emotional bums, all right? Good looking bums, by the way. So, and much more stylish than we are with our plaid shirts. All right. All kidding aside, I think we're going to get a bounce, and the bounces are going to hit these levels. And if we do manage to take out the 3,900 level or 39, in that case, see you later. I have no idea if that's going to happen because the technical damage done has been pretty rough. So let's move on. Let's move on. Erase all drawing. Let's look at the next chart, which I've already shown, the NASDAQ. Total frigging disaster. Okay? It was holding up, it filled the gap, came, but this is where the concentration is. This is where most of the leverage was. This is where everybody who thought they were a frigging genius were buying the big cap tax over and over and over again. Remember, since Nvidia went down that day, I never posted a single alert about Nvidia. I'll take full credit for it. I posted DraftKings, went up, still going up after hours. Because they are just signed in with Dish Network. Now you're going to do sports betting, watching TV, visual of your favorite athlete, boom, on your iPhone. All right, I'm betting $5, $10. I don't, but I'm just saying. That stock is $100 stock, regardless of all this macro stuff. It did just sign with Dish Network tonight. Read up on the news. So given where we are with the NASDAQ, the last time we actually got really, and this is where I do agree, that if you're in large cap techs, you are going to get hit more. And the NASDAQ, I agree with Leah on this, does have room to fall. And the QQQs can go to 305. It's going to be fast. It's going to be furious. And that was the low, a significant low on the beginning of the year, January 4th, first trading day of the year. You can see the chart. I'm just trying to show it in a pattern. 1 second, right there, look. And from looking at the externals, even though we have completely blown out the lower Bollinger, that's another thing I do want to mention to many of you who are not ACS students, that when you blow out of a Bollinger, that means you have completely overshot whether it's on the upside, when you blow out of a Bollinger, you come back in the Bollinger. This is undershooting the Bollinger. It always comes back in the Bollinger. As long as the Bollinger Band doesn't keep on following you, that means it's going lower. I hope somebody understood what I just said. So I would say 305 would be a screaming buy.
Frank,
Screaming
I have a
buy.
question.
Please
May
go
I?
ahead, Leah. Yes, of
I
course.
think it's also the all-time high from September 2nd. That was like the very first all-time high we hit. And that's why I think it's a very nice support there.
September 2nd, you said?
Yeah, that was the the summer all-time high, and then this massive dip happened on September, October last year.
Okay, 1 second here.
It's like 303.50.
Yeah, yeah, somewhere around there. Yeah, that's like.
I'm going to go to that chart. I'm just going to scroll to the chart very quick. This is your Dow. This is the Dow. This is the 50-day moving average. This is where we bounced from. The Dow was holding out fantastically fine till, of course, everything is interconnected. Big funds getting for selling. They got to sell, Boeing, which was up like almost $11, still ended up almost $7, all that stuff. So Dow, what's the next one? This is where we are on. We're going to go revisit the NDX. I want to see what you guys just mentioned, which is very important for everybody else. This is your NDX. Looking at the technicals, remember, you cannot go any lower than these. You cannot go any lower than these levels that you're seeing. That's why I have a red line here. This is your internal stochastics. All right. And you're seeing every single time this has happened. And remember, doesn't matter why markets crash for different reasons. They always follow the same pattern. So if it gets really deeply oversold, you have to look to see where did they bounce from, not the levels, but the internals. So we're down here, we're down here, we're down here. This is a simple way of looking at it, okay? We're down here. And this goes all the way back to September. This goes all the way back to September. So when you get to these levels, there'll be some back and forth. There'll be some back and forth, but you inevitably always get a bounce. You always get a bounce. Now, if this thing that bounces, like I said, you have to be selective. You have to be quick. I mentioned that in the first part of the session. You can make a very decent sum of money. Those bounces are 300 to 400 points. You guys all know that. 300 to 400, 500 points, then they sell. Well, make money off those 300 to 400, 500 points. Go liquid. Don't have to be sitting there saying, oh yeah, it is definitively going to bounce from here for the next 2 weeks. No. 2-day bounce, make a lot of money. Feel good, push back. So basically just showing you the levels where it normally the bounces happen. It's a megaphone pattern. It's blown past the lower Bollinger. One point or another, bounce or not, this is the 50-day moving average. We normally lose the 50-day moving average on days like this today, and then it bounces back. It's called standard deviation or mean reversion. Okay? So let's move on.
Question.
Of course.
Personally, it takes a lot to get me very bearish, and I'm not. But I was curious. The only thing that has me a little bit hesitant is you'd mentioned megaphone. I see that as a rising wedge on the S&P, and just curious about your thoughts about that, because we look like we're like, usually when we bounce off of that, we get a more significant.
So
we have more time before we hit it again, and we've hit it like now twice in a few days, which makes me think that we might fall out of it for a bit.
Sure, absolutely. So I'm showing you the S&P on the more Thinkorswim chart, right? So here's your extended channel with this being with the overextension 4,500, maybe at some point this year. We don't care about that. What we're looking at is this here. We have this is the weekly. I got to look at the daily. Thanks for asking that question. Okay, let me get this out. remove drawing, make it clear, easy on the eyes. Okay, this is your daily chart on the S&P 500. So what we have right now is we are kissing the 50-day moving average. Exactly, that's pretty much where we ended up today at
Right.
38.20. So when you have a red candle like this, let me see if I can zoom in. When you have a red candle like that, it doesn't stop right away. That means there is going to be a follow through lower. That
Right.
follow through can be an hour, or that follow through can be a day. Generally, in this type of dynamic market, which are completely robotic, it happens in hours. It happens fast and furious. Like, that's it. Let's get it done with. You know what I'm saying?
Mhm.
So, oh, come on. I'm just trying to show this and trying to zoom in here. So here you have something which is significant, okay? Because markets always do this. Look at these two lines here. This was the rising wedge or the ascending triangle, which no one believed we could have broken out from. We broke out of that on right around Thanksgiving on November 23rd. You see that, everyone?
I don't see the triangle.
Oh, you don't see the triangle? Okay, I'll make it easy for you. How about I paint it a different color and make it really thick? 1 second. And this thing I was pushing for a long time, and it happened. 1 second. I hate this think or swim switching me back. See the triangle now?
Okay, yeah.
That's a massive triangle since the COVID-19 lows, which was March 23rd, 2020. Okay, we have had multiple correctional phases along the way, and every single time the correctional phases happened, the same old words came by. Not yours, I'm talking in general. Okay, so we're pretty much doing the same thing right now,
Hmm.
except from higher levels. Here's the difference. The Federal Reserve Bank that nobody understands, everybody's got a frigging conspiracy theory, because everybody nowadays, it seems like in America, both Democrats and Republicans seem to live on some conspiracy bubble. Okay, but I'll let you in something, kind of humor. Life is a conspiracy. All right, that's the reason we live. Exactly, it's God's conspiracy. All right, so everybody's some conspiracy theories. Federal Reserve is globalist, all that garbage. Except the differences between all these times that we have corrective phases was the Federal Reserve was not pumping liquidity and constantly saying we are going to remain liquid. We are going to keep interest rates low. We didn't have Janet Yellen on the government and Jerome Powell, two of the finest Americans, smartest Americans ever. You know my theory, make America smart again, right? Exactly. That's how you make America great again. Okay? Make America great again is not like, well, I'm not going to say it. So bottom line is that we have two great people in concert working the fiscal and the monetary policy. And the Fed is very, very open. So bottom line is, open to keeping the economy vibrant, not raising rates. So saying all that, the way I look at it, and then maybe, I'm like a little too simple. Worst case scenario, we have, and these are longer term projections, okay? These are longer term projections. If you look at this chart here, you could say, hey, that's a nice little head and shoulders going on. So we will land up at 3,700. That's 120 points from here. That's 840 points in the Dow. Sure. Am I going to put money down and bet we're going to go down 840 points? No. You guys can do it. Feel free to do it. Buy a couple of puts, okay, on the SPX or the SPYs. Now, why wouldn't I do that? Different reasons. One, I told you, the Federal Reserve. Second, the stimulus bill, which is going to get pushed through. Third, Q1 March quarter is, in my opinion, the fund managers. Remember, there's a money management aspect to this business that traders don't understand. Money managers do not like losing their bonuses, just like any other business. So why the heck would they sell everything in March, show a nice red P&L when the quarterly reports go up to mom and pop America from all the hundreds of mutual funds, Fidelity, Pioneer, Vanguard, Putnam, you name it, Oppenheimer, so many hundreds of mutual funds. And mom and pop opened that and said, oh shit, man, no, this sucks, man. I'm gonna take money out of there. My next 401k, I'm just gonna put it out with somebody else out there. Like maybe I'll buy crypto. No, they don't do that. They want to print the money so it stays stable. Remember, markets just don't go up and down because you and me think something's overvalued and I'm analyzing charts and no. Money is in the hands of powerful money managers, pension funds. That's how capitalism works. Or else, why don't we give all our money to Putin or the North Korean guy? Okay? Or Biden's buddy in Ukraine. And say, oh, why don't you manage your money and manage my money, man? No problem. You're great. They freaking steal it and fly to Mars. Exactly. So we believe in our money management complex. Whether you like them or not, I don't give a flying F. Okay? Wall Street overall is good. Capitalism is great. That's what America was built on. Or why don't I give it to that guy, like, shooting down like a bottle of Jack every hour, down somewhere and say, hey, listen, dude, why don't you manage that $20 million? Oh, no problem, man. Just do it. Okay? No, we don't do that. So they're not going to be blowing up their bonuses, which means they're going to keep the market kind of stable till the end of the first quarter. End of story. All right. So right now, what we're doing is we are testing the 50-day moving average. We are going to slip down just the way we did. And I'm trying to zoom in, show people. 1 second here. Okay. Finally got it where I can see it. Okay. You got a gap here. You see this gap? Let me put this line here. Pure technicals. No emotions, no Jack Daniels. All right, 1 second. Or Kentucky bourbon, my favorite. All right, 1 second. Okay, so here's a gap fill, somewhere around here. And that gap fill is around 37.86. Also happens to be on this ascending triangle, which broke out, and nobody, well, a lot of my members did, but nobody out there said this would happen. Nobody said this would happen. Okay, after the elections. Exactly. Exactamo, like they say, right? Yeah. Believe me, I know because I got the same DMs at that time. So when this happened, it's like, oh my God, it's all over. Okay, it's all over. So it's all over here, January 29th. It's all over here on February 26th. It's all over here. Okay, I'll take the all overs and I'll take the all over reflex bounces also. So what is my all over point? The all over point is 37.92. That is only 19.8. 25 S&P points from here. 25 S&P points. We're already down 18 right now. We're already down 18. Give me 10 more. Give me 15 more. Give me some goddamn cheap prices. All right? You want to buy that F-150 Raptor? All right, that V12 monster. I want to buy that, Lamborghini Urus, and it's 40% off. Well, go frigging buy it when it's down 40% off. Credit, no credit, whatever. This is what's happening in the markets right now with the NASDAQ. All right? So give me another little down. This gap fill, in my opinion, will be the bounce point, which also happens to the confluence of this uptrend line, which is approximately 3,800 or so. Let's say we completely break down. Let's say the stimulus bill doesn't get passed. Then we are looking at 3,700. S&P and E-minis like to move in 100-point increments on massive pull downs. But I do know one thing, that it doesn't happen in one single moment. And you have all seen that, but most of you forget. It happens in staggered levels. So if you're an active trader, you want to make a little bit of money on a certain day, then you can play the bounces and then short it depending on the technicals, like the internals we can look at right now, and we'll see. This chart itself externally certainly looks like we are going to be down. Like I said, 19, 20, like another 160 points on the Dow. Now, let's look at the internals, what's going on the daily. The internals don't seem to give a flying F. They're still nicely climbing, about to cross over. Shouldn't they be like crossing down, like all the way, like, doing this? Just asking. Shouldn't they be? Oh, come on, change the color. Sorry about that, guys. So shouldn't they be doing this? No, they didn't do it. And we got a big thump. Big thump. What they did was they still continue to do what they're doing. Let me show you one other chart, which is very interesting, which is the New York Stock Exchange oscillator, which, by the way, the gentleman whose father founded the McClellan oscillator, Tom McClellan, was on CNBC yesterday. I did manage to put out a quick tweet saying, hey, watch him. The guy is just such an amazing genius. He's not a trader. He's just a friggin' genius. Remember, geniuses are not traders. Traders are like bandits, drive-by bandits. The real geniuses are the people who think long-term. But I don't know if I'm, So just keep that in mind. All right, so let's look at this. And let's do this. 533. I haven't seen the 533 in a bit. Where is it? Where is it? Where is it? Okay. Give me a second. So this is what all of us felt like today, the second half of the day primarily. And Boeing, by the way, is going to 250, 260. Can I ask somebody a question? Well, if you guys would like to volunteer to answer. Who's made some real money on Boeing since I've been telling people to buy it since it was $190 weeks, not too long ago, weeks ago, 2 weeks ago, 3 weeks ago? Has anybody been making real money in Boeing? And be honest. Obviously, the answer is no. Good. Because Boeing, even the cheap calls today, was up 380%, not to mention the forward calls for March 12th were up 175%. And Boeing's chart is still phenomenally good looking, which I've been showing a lot. So when people tell me that, so that just shows that the market has still much more room to move if you are looking at certain stocks, the broader market. And the reason the Dow was up quite a bit before it succumbed to the pressure of the forced selling, the Dow was up a lot because of Boeing, because of United Airlines, which was still green. Even after the massacre on the NASDAQ and the pullback on the Dow, United Airlines from yesterday to today, not to mention from days ago, was up 40%. At one point, it was up 111%. And there were certain stocks which are still green. Few, but, So let's do this. Let's do this. Hold on 1 second. In the worst bear market, you can always find certain stocks or certain sectors which are going the other way. So let's do this. Daily, fill the chart. I just have to set this up. Area. I'm not going to talk. Extended hours. That's interesting. Bollinger Bands. This is Bansky doing a painting, okay? I'm just kidding. If anyone know who Bansky is, I'm sure Leah knows. Okay, let's see here. Full stochastics.
Are you showing a screen right now? I can't see anything. I might have done something weird.
Yeah, no, I can't either. I can't either.
Now
There
you
you go.
can. I have no idea what
Okay.
happened. Thanks for telling me. Yeah. Remember when Bansky paint? You know who the artist Bansky is, right? You guys?
Yeah, we do. I do.
I'm sure. And if none of you know, then highly suggest that you Google who Bansky is. Bansky has no one knows who he is. His paintings get sold for 20 million at Christie's and Sotheby's, and some of them actually explode while they're being auctioned for 10 million bucks. All right. I mean, not explode, but they kind of like disintegrate. So when Bansky paints and he shows his art, nobody knows what his face is. And if none of you know who Bansky is, man, it's time to get up there, guys. Come on. You know, get off the Molson and check it out. Jesus. Not offending anyone, but seriously, all right? All right, there we go. Here's my baby. Stupid ads. Okay. All right, let's look at this here for a minute. Literally for a minute. Do I have the right color? Okay, what's happening here? It's going higher. Love it. What happened when it crashed and it went to 63? And I said any single time you see the McClellan oscillator go beyond 50, you want to buy the crap out of the market, bar none. Make big money. It might not happen over the next 5-6 hours, but within a day or two. This is a chart that was sent to me. You guys can replicate this chart, by the way. Don't ask me why. Was sent to me years ago by a great friend of mine in Canada. Okay, and he also sent me something called the SPX 533, which I haven't shown in a while. It works literally 90% of the time. And I don't care what somebody's thoughts or feelings and the fact that no one knows who the artist Bansky is, Sorry about that. Okay. So when it went to 56, we had a massive 430 point biggest day in the market. The little pretty heads on CNBC saying biggest day in the market. Today was like the worst day in the market. Did you see the headlines? With the worst day in the market in the NASDAQ. That was the biggest day in the market. Okay, when you hear the biggest, you want to sell, keep it little, sell most. You hear headlines, it's called the headline factor, right? The noise factor. You hear all over the media, all different channels. Like, it's the worst day in the market, everything. Guess what? You want to buy a little bit. It'll work 100% of the time. So this New York Stock Exchange McClellan oscillator, and look him up. Go to McClellan's website. Unbelievably smart, super too intelligent for most American guy, but he's unbelievable. Okay, and this works. So basically, the internals are telling us it's turning. Yes, it's going to be a little pain intraday back and forth, but despite today's bang on the market, it still continued to turn. This is bottoming. The RSI is kind of flat. And this is telling me that, yeah, it can slip and slide a little bit more, but then it bounces. And it gets like this, really overbought. You don't have to know the numbers, just look at it. It gets overbought. That's when everybody's like super bullish. Everybody's showing me charts of how high a stock can go. And I'm going on my webinar saying, hey, take it easy a little bit. I'm not that bullish. Nobody can get that bullish when the McClellan oscillator hits 47, 53, 65, 67. That's when humans get very excited. They feel good. They're making some money. I get super bullish when the McClellan oscillator hit the other day minus 56. Today, minus 30. Yes, it can slip and slide a little bit. It goes down to minus 56 again. I'll buy hands down. I mean, really hands down, not just selectively. Next, let's look at the weekly. This is just the way I operate. I'm not trying to change anyone's mind, okay? Look at the weekly chart. Take a good look at it. Let me point out. Okay, got it. It's a double bottom. It's a double bottom. It's a W pattern. This is when people get super excited. And by the way, just want to mention it. And Mike H is a great friend of mine for years. Moderately higher oil prices, where we are right now, is generally correlated with the improving, stronger economy, which is great overall for stock markets. End of story. After a certain threshold, it becomes a drag on the economy. And that threshold is normally 70, 75, 80 bucks BBL barrel, barrels, price per barrel. All right? Just letting you guys know from history. Okay, what's happening here? So far, so good. This is telling me that we can slip and slide a little bit more on the weekly. That's why I'm saying the next couple of days could be very tricky, or maybe not. But short term, you will get a reflex bounce. So none of these charts are really telling us anything which is Armageddon. Now, let's take a look at what you guys were talking about, which is the NASDAQ, right? Allison, Leah, the ladies in attendance, you were telling me about, okay, should I go daily? Okay.
Yeah, it was on daily, yes.
Okay, on daily. All right, let me get these lines out. Remove all drawings. Oh, come on. Thinkorswim always keeps on doing this, keeps on like sliding over. Just trying to.
Yeah, I have the same
Okay,
problem.
there we go. All right. Let's draw some simple lines here. Internally, we're very extreme oversold. But let's agree that when something is overbought, it can stay overbought. If something really wants to go nuts, it can keep on going nuts. And remember, I told you guys on multiple webinars, I don't like it every day when a stock opens up $10 higher because I don't have a chance to buy it. You guys remember that? I'm not in the business. I mean, I am in the business of chasing certain stocks, making new highs or breaking out, but I'm not in the business of chasing a stock going up 50. You know how many days, like I put my head down or put my hands on my head, I think, I'm not quite sure. And I said, shit, man, I can buy this like 15 bucks higher. And then the next day it goes up another $15. So I like when they drop 15, 15, 15 every single day. I'm serious. So something that gets overbought can remain overbought. Right now, we are basically, let's draw this baby out, okay? Drawing tools. Let's do the, why don't I have the Fibonacci over? Okay, forget it. I'm just going to draw a couple of simple lines. This was a low on January 29th. This was the low on the beginning of the year. Okay, so simple stuff. This was the high. Remember, every action has an equal and opposite reaction. I didn't say that. It was my uncle, Sir Isaac Newton, who said that. No, he wasn't my uncle, just in case some of you take me seriously. I wish he was my uncle, so I'd be a little bit more smarter. But an apple didn't fall on my head. So you guys do know who Isaac Newton is, right?
Yes.
Very good, very good. Look up Bansky sometime. So, all right. So, basically, we have a triple bottom here. I'm just gonna move this another line here. And by the way, I was just kidding, like asking people who Isaac Newton was. It's a joke. It's me and my stupid humor. Okay. Come on, I'm so sorry. It's not my fault. This is just because this is going to be very important. Okay. They better give me control over my own screen right now. Okay, they did. One more time it flips. I'll, scream at TD Marriage rate. All right. So we have this was the lows at the beginning of the year. I believe that's going to be what we call max downside. All right, on the NDX. It's not too far away. It's roughly about another 100 points, and we could get there. And we could get there very quickly, just on the technical money management aspect over the next 24 to 48 hours. Instead of a reflex bounce, we could continue the selling. We could. Just so you know, the heaviness of like, okay, margin close. I met a friend of my son's, went to school with him. He works for DTCC. You guys know who DTCC is? Anybody? Mike, Paul, Allison, Leah? No? Okay. Let me enlighten you. Every stock trade that you do, every option trade that you do has to go through a settlement. It's called the Depository Trust Corporation. Depository Trust Trading Corporation, whatever. It is the Federal Reserve of stocks and options. Okay? Remember, everything has a settlement period. You sell something, it has to settle. T+1 for options, T+3 for stocks. So the kid works for DTCC. He's very smart. I said, how you been doing? He goes, well, obviously we can't go in the office. He's been working till 4 in the morning. He was in a team that did the settlements for GameStop. So what else do they also look at? Remember when Robinhood almost went out of business because they didn't have money? And then they had to get $3 billion from Citadel and Point72, the hedge funds? He said, Vlad, the guy, the guy who looks like Wayne, the comedian, the Robinhood's one of the founders. He goes, he lied. We never called him at 3 a.m. in the morning to tell him he had a $3 billion margin call. We just, we don't do that. So what happened? The reason I'm saying that's all has to do with institutional margin selling. There's a lot of hedge funds right now which are completely tech orientated, and especially small ones. They're blowing up as we speak. They're blowing up. Okay, so that carries on over the following days. So you get a little rally and boom, selling comes in. You think selling just comes in because you and me are selling a few hundred shares or a few $1,000s worth of options? No. We're not that special. It's the big boys who need to cover their margin call. So that's why you get to continue selling. So I would say that this is where we come down to. Now, the other thing that's happening, we lost yesterday. We lost the 50-day moving average on the NDX, on the NASDAQ, thanks to things that I've been talking about repeatedly, big cap techs. Overall, stay away from big cap techs. Some of them will go green. Hopefully my Netflix goes green. Square is really not a big cap tech. It's a more digital crypto thing. That's why I got a chance to buy it today again. Love Square down 20. Finest company in the world that I told people to buy when it was at 140, 150, 160. Told you guys that it would go to 250. How many times did I say that? And guess where it went? Square went to 283. So now it's at 230. I said, okay, let me get a little bit. So this chart is basically telling me max downside this. The other thing that's happening, extremely oversold conditions. That's fine. I already explained oversold can remain oversold. The other thing that's happening is that the standard deviation from the 50-day moving average and the 34-day moving average, i.e. the distance traveled away from the highways, which, by the way, just so you all know before you get really, really bearish and give up your American passport and move to Burundi, all right? Somebody from Burundi is going to say, man, this guy's a racist. I am not. I love everybody, and I don't like everybody. I'm just kidding, all right? The distance traveled from the highways that we travel on, which is the 50 and the 34-day moving average. Do you guys see any of those moving average actually crossing down like it did around here? Actually, never. Yeah, crossed down for a little bit, then shut up. Do you see anything? Is it moving sideways to still higher? Yes or no? I'm just asking for a yes or no. Anybody can answer? Are any of the major moving average, not what happens in one day, not what happens in 1 hour, but the daily moving average, do you see any of them crossing down or something breaking down, whatever? I'm talking these two lines.
No.
Exactly. So what I am hoping and thinking that this is a temporary phenomena, because even after these huge thuds, I mean, these are big candles. These are like this that happened back in September. So what you guys were talking about, right? September? You guys were talking about September, right? Do you want me to look at September? What happened? Yes?
She was talking about the peak maybe being good support.
No, but I'm talking date-wise, because I have something to say. Date-wise, you wanted me to compare this to what happened in September, correct?
I don't know about that.
Okay, Leah, you also mentioned September to look at the NASDAQ. Okay, let me explain something to you. This has worked for me for a long time, for many years, Alison. Okay, this is your 50-day moving average, the red line. This is your 34-day moving average. You can slip and slide, and you look at the distance that it's traveled. This is probably a -2 standard deviation, just visually speaking. Okay, this was a massive move, which is possibly a +5 deviation. That means you're deviating away from the highways and getting severely happy and overbought. Okay, it always reverts back to the mean. Markets always revert back to the mean. It's called mean reversion. So look at the distance here. Look at the distances traveled here. It will revert back and at least try to kiss the back end of the 50-day moving average. And it will happen literally within a matter of 48 hours, whether I don't know the 48 hours to start tomorrow or on Monday, but it will happen over a duration of 48 hours. Vicious reflex bounce. Now, if it gets rejected at the 50 and the 34-day moving average, at that point, you can short hard, because that means the market is overall broken for a short while and we could be looking at lower numbers. But I wouldn't be a committed short or a tactical short in any major way other than small amounts of money, unless the market attempts, you could short from here to here, but you got to be quick though, very quick, because this is a major support level, major. And at that point, the standard deviation is going to be almost -4. That means heavily oversold. Apple will kick off their buyback programs. One switch, they'll be buying their own stock like they did the other day. Warren Buffett will be kicking in and buying more Apple. It's going to be like a confluence of big time money coming in and buying some of these stocks in a big way. All right. So whether it's Apple, whether it's Nvidia, things like that. Nvidia, look at that. Stock's like almost at 500. It's a screaming buy, in my point. Like literally, you scream, you buy. I'm dead serious. I showed the Nvidia chart too. So bottom line is, but once it goes here and fails, that will basically tell us that either we get a triple bottom or it's going to go further lower. But we are severely oversold. I have nothing more to say. And as you can see here, that the same thing happened, but there were some big days, came down, retested, all below the red line, which is the 50-day moving average, and then just took off like a rocket. So my point is, when it does take off like a rocket, then don't miss this money, because it is the sweetest money you'll ever made, only if you buy at these levels. You do not make the sweetest money when you buy at these levels. It happened every single time. We lost the 50-day moving average, and then bang, 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 bang. Within 3 or 4 days, you're like, you can't believe your eyes, like it's moving like rocket speed, because that's when the shorts cover, the money comes in, creates a double top, bang. Retest the 50-day again, goes. Now, am I saying that that exact pattern will happen this time? No. I'm simply saying that when you lose the moving average, the 50-day moving average this badly on these great companies, which have really done nothing wrong, and interest rates are still kind of, we're going to look at the TNX chart next, by the way, Allison. Then that's it. But pattern-wise, looks like crappy. So I'm still looking at this level as a major support level. Are we good with the NASDAQ chart right now? Allison, Leah?
Yes, thank you.
Okay, let's look at the TNX. Allison had asked me a question earlier on that you mentioned that the TNX, I had basically mentioned, I didn't want to take the screen out. I basically said the TNX is basically coming down. And so her question was that if it's moderating, why did the stock market do what it did? The answer to that question is, Allison, is because of what I explained quite a few times earlier on, that we had that forced margin selling capitulation type of routine. European, I'm sure a couple of European small hedge funds, including some of ours, blew up today. Blew up. And when they blow up, then I'm talking funds like in the $200 to $600 million range, maybe $1 billion, and they're heavily concentrated on maybe Apple or any of the ones, Amazon and this and that. They blow up. And when you have blow-ups, you get a 3%, almost a 3% down day in NASDAQ. That is American financial history. You don't get a 2.7%, almost 3% down day on NASDAQ because mutual funds decided to get rid of all their positions. No, they didn't. It's never the mutual funds. It's always the small hedge funds. And some of them blew up today. And good for them. Because when they get out of the business, we tend to do better. Now, let's take a look at the 10-year government bond yield. The 10-year government bond yield, looking at my charts, this is the same chart that I showed all of you guys. I believe as it was starting to create, when it was starting to come down, Allison, it actually created, if you notice, kind of a bull flag, right? Right? Went up and then consolidated. This is where it hit. This is where I had drawn a chart with a big red arrow saying it was going down. And the next following day, the market rallied 500 points. And the NASDAQ went up, like had its biggest day since, whatever. It was huge. So then it started to ease back, pulled up a little bit. This looked bad, looked like it was going to come down. But then at 1.4%, it decided to jump. We hit 1.5. Remember, you have to move the decimal to 1 to the left. So it's not 15%, okay? Just for some of you who are not really aware of what treasury bond yields are, we're not dealing with 15%. That was back in the 80s. So you just have to move the decimal 1 point down. So that was 1.5%. We hit 1.5%, which is a psychological number. We pulled back. And I believe that it will eventually come to rest back, Allison, at the 1.4% level, which will trigger a very sharp reflex bounce on high growth stocks, which are somewhat correlated with higher bond yields, even though not really, but that's the perception. And the markets will basically, it's like you have a relief rally. Are you with me so far, Allison? I'm answering your question you asked me earlier on DM.
Yeah, you are. I was just, you mentioned a downtrend, and I wasn't sure, just based on your chart, which downtrend you were referencing.
Okay, that was what I was going to come into next. You read my mind. Thank you. Is when you, again, let's look at standard deviation that I just explained to you on the S&P side. Like when you move away from the highways in a significant way, you always revert back to the mean. It's called mean reversion. Look it up on Investopedia, Google it, whatever. It happens to stocks, it happens to indices, it happens to any chart. So here is your 50-day moving average. Here is your 34-day moving average. And we just overshot. We just decided to leave the friggin' highway and just go our merry way all the way up into, like, I don't know, whatever, like on top of the mountain. Well, guess what happens when you hit the top of the mountain? And Mr. Tom McClellan mentioned the same thing about the spike on the VIX when he was talking about the VIX yesterday. And then Kramer mentioned some other big shot guy who studies the VIX and this and that. And he also studies the VIX on the treasury bonds. And he said the same thing. These type of spikes always revert back to the mean. Well, I'm not that smart. I just want to make it simple. Here's your moving highways, 34 and the 50. You just overshot and decided to just go off the highway and just go nuts. That's why the market kind of freaked out a little bit. This standard deviation is almost, I believe, +7. That means you're 7 miles. Let me put it real simple, like I'm, explaining to somebody on the street. Except they hit me on the head saying, "What the hell are you talking about standard deviation?" All right, you're 7 miles away from the highway when you should be sticking to the highway to get to your destination. This is the biggest standard deviation move on the 10-year government bond deal I have seen in a long time. And that's what worried the markets. So what's going on here? Well, part of it is that, some funds are basically shorting the government bond and making money on the short side, because government bond prices falling means yields are rising, right? That's the way it works. So this standard deviation will revert back to the mean. Does it mean that the rate has to come all the way down and kiss 1.2%, which is the gap fill, which would be incredible? That means the markets would rally 1,000 points from here. No, it simply means that it needs to come down and hit some of this uptrend line, for example, which is about 1.34%. Now, I know you guys don't want to hear this, but I don't care, because this is what makes you the real FU money. All right? I could show you like, wow, look at my SOS. Thing was up like 35%, today. And where were all you guys? It was still up 16%. GME was up 6%. At one point, it was up 13%. All this stuff. But no, I want to teach you guys something which hopefully you guys will utilize to handle your emotions and your money. So when Allison asks me, like, and this is the last thing I'm going to say, it's almost 10, 12 p.m. Wow. When Allison asked me, like, where do I see the downtrend? I see the downtrend in this. This to me, number one, the standard deviation is like incredible. This has to come down somewhere towards the 1.3%, if not 1.35%. And that would be fantastic. That means Treasury bond yields easing back. And yeah, it will happen. It will happen. Now, if it shoots up towards here, Allison, all bets are off. That means the markets are going to crash more if it hits the upper end of the channel. So I'll be watching this very carefully, and so can all of you guys. You guys have computers. Look at the internals, what's happening. The internals are diverting. Even though the Treasury bond deal from yesterday went from 1.4 to 1.5, that on a percentage basis is a move of 7%. When a stock goes from $1.40 to $1.50, it's up 7%. So that means on a rate of change basis, you are up 7% in one day, and the market's kind of freaked out today. But what happened to the internals? The internals kept on going down. So that's what we call a negative divergence. Same thing happened with the McClellan oscillator. It kept on kind of staying flat to down. It actually peaked. The McClellan oscillator. This is the way technical robots look at the market. It peaked when the yields were at 1.19%. And that was back on February 8th. Since then, the McClellan oscillator has been going down, yet the yields have been ramping up. It's like a stock going up while the internals are going down. So what eventually happens? It's payback time. That means it falls. And the same thing is happening with the bond deals. Okay? Now, the bond deal at 1.47% or 1.5% or 1.6% in the bigger scheme of things actually is nothing to be really scared about. But there are so many funds like who do all these derivatives and this stuff. They're attached, so they have to unwind positions, and that's what happened with the Nasdaq. Now, what's happening with the MACD? The MACD is soaring. It is soaring to the point where it is horrendously expensive. What happens to things when they get horrendously overbought? They get oversold. In the meantime, if you look at the bars, it is actually coming down. another negative divergence. So I might not be a $20 million bond credit analyst at Goldman Sachs, but I think I've been dead right on these things for a long time. So that's the answer to your question as to why I think, Allison, why I think bond deals are in a technical downtrend. However, all bets are off if we cross over and move towards these levels. But so far, I think bond deals are going to ease back towards these levels based on everything that I just explained. Do you understand what I said?
Yep, thank you.
Anytime, Allison. All right, guys. I love you all. Stay selective. Do some active trading. Like I said, you want easy answers? I got none. Do I have tactical answers on profits during the day on certain things? I ended up nicely red today. The second half of the day. Did I feel good? No, I feel like crap. Do I cry and moan and groan and say, oh my God, it's all over? No, that's the difference between me and the regular trader. I just showed you why I think the markets are in for a significant bounce very soon. Very soon. Nothing is all over. Why is it all over? I asked you all at the beginning of the session to give me 3 good reasons other than Mike Harrington came up with the oil reason, which I didn't agree with. Okay? Which he might be right on. I don't think so. So, anyway, 3 good reasons why the market should crash. Did anyone else think about any answers? Just asking before we go. Mr. Miro, you're a smart guy. Give me 3 answers. Or give me 1 answer why you think the markets are going to completely crash. All markets.
I wish I could answer that one. I'm too new at this.
You're not too new at this. You've been doing this. Come on. Doesn't matter. Think about it next time. Okay? Paul, what do you think we're just going to all of a sudden just completely like all broader markets are going to crash other than the NASDAQ, which, is down for different reasons.
I
Anything?
can't think of anything, but the only thing is, like you mentioned, the MACD is overbought
I
there.
don't want
Like,
tech.
if you
No.
look at the NASDAQ. Look at
I'm not.
look at the NASDAQ monthly. That looks pretty extreme. Like the daily's oversold, but the monthly's overbought.
Monthly is definitely overbought. So my question was from an economic reasons. Why would you think, other than what you're talking about is evaluation reasons, right?
Yeah,
You're
maybe
talking
it's
about
predicting
it,
some news. I don't know, but I have no fundamental reason.
and you're right about one thing though. The distance on the monthly from the 50-day, this is monthly. This is like really looking out ahead. Is very like, remember what the daily looks like? It's like well off the 50-day, but then you look at the monthly, then you say, whoa, it's just the opposite. It's way off. It's veered way off course when it comes to the 50-day moving average. I'm more concerned about the daily than the monthly right now, but go ahead.
Yeah, I agree with you. And fundamentally, from the monthly,
We can hear you because of your mic. You're talking and all of a sudden it's going into like R2D2.
overbought.
No, you sound like that Star Wars robot who got drunk. R2D2, like drinking beer. That's what you sound like. Seriously, we can't hear you. What's your question? So Miro had a very good question. Looking at big cap tech charts, long term, looks like everything is so overextended that it's area to go down. I kind of agree with that. So here's my question, Mike. Why the hell do you always have to focus on big cap techs when there's the new generation of techs that we've been talking about and trading, which have a long way to move higher? Could you answer that, Mike? Why do you always have to be focused? This is something that I don't get with people. I'm not just talking with you. I hammered Paul on this like a while ago too, because you guys are all friends. Okay? Why the hell are you all so frigging with Apple and Amazon and Facebook and Google? Why not look at DraftKings? Why not looking at Fubo? Why not looking at Square? Why not looking at even Nvidia for that matter? Why not looking at the fuel cell companies? Why not looking at so many other companies like Magnite, MGNI, like CrowdStrike? Why does it have to be big cap techs all the time? That's the mental calibration all of you need to have. Stop looking at the same old frigging big names all the time. Look at the new generation of companies. There's so many of them. Look at Lyft. Look at Uber, reopening trades. Look at Space, very oversold. Look at Blink. Stop looking at AMD all the time. These are great companies, I know. Look at Square, the next generation of digital currency and crypto. I got to end it on that, okay? Good night, guys. Love you all. Let's hope let's hope tomorrow. Like I said, stay active, keep things selective, move on, and I'll do my best. And thank you for being here so that I could finally share some of my thoughts. And Allison, thank you for returning back to the fold. Have a good night.
Yeah, thank you, Frank.
Anytime, ma'am.